I mean, unless you've been living under a rock, everybody's heard about a little stock called Gamestop. And then there's Reddit, and there's Robinhood, and there's these millions of little investors kicking the hedge funds' asses. This is a wonderful time.
Although, and so, you know.
Peter, so did somebody step in to protect the hedge funds? Is that what happened?
Well, maybe. We don't know, right? But what happened was Robinhood, which is where a lot of these buys were being executed, right? A lot of these small investors on Reddit have these Robinhood accounts because they have no minimums. You can buy a fraction of a share and it's zero commission. You're trading for free. So they have this big platform of do-it-yourselfers who got in on it. Now, what people don't realize is there's no free lunch, right? So you open up this Robinhood account and they're not charging you anything to trade. So then you have to ask yourself, okay, these guys are not just, charitable organization. How do they make their money, right? Who's paying the bills so that I can trade for free? Well, the people who are paying the bills are some of these hedge funds that were short these stocks. So you got to think, all right, maybe the hedge funds were like, hey, we're your actual customers here. You're screwing us over. You better stop this buying. Or maybe they told Robinhood, we don't want to buy those orders anymore. If you keep giving us orders to buy these stocks, we don't want them. And now, in order for Robinhood to execute them, they had to pay somebody to execute the trades. But they're not charging the customers anything. So they're losing money every time they trade. So they probably had to halt the trading to stop the bleeding because they would have run out of money.
Right. So I was laughing my butt off because GameStop, in my opinion, is worthless. It's a retailer that's out of business. His business model is finished. GameStop as a brand is probably valuable, but not as the existing business.
Yeah, they have to turn it over to, it has to go from a brick and mortar, store in a mall, to something online, although how do you compete with Amazon? How do you compete with, these big behemoths? Yeah. But yeah, there's probably some way to restructure it in a much smaller way, but I'm sure all the equity holders would get wiped out in that restructuring. And the bond holders will end up owning the company. I don't really know how much debt the company has because I had no position in GameStop. But to me, it's just a future blockbuster, right? The video stores that we grew up with, or we didn't even grow up with them, they started in the 80s, but you went and rented a video. But obviously, they got put out of business, and people are not going to the mall and buying a physical game. They're just downloading stuff online, or they're signing up for these services where you have unlimited gaming, like a Netflix of games. And these are dinosaurs, and the shorts knew it. That's why there's so many shorts in these stocks, because they could see that the companies are in trouble.
Yeah, so to me, I was laughing my butt off because GameStop sold these games to these kids who understand games better than you and I ever will. And then they turned against GameStop, or they turned against Wall Street. And it's a classic case of David kicking Goliath's butt. So the hedge funds who have billions, and the worst thing about it is this, the hedge funds are in pension funds. And I think there's going to be the ripple effect from this is going to be massive. But let's get to a subject you and I are near and dear of. And let me say again, I do invest with Peter Schiff. What is happening with silver? What is Reddit and Robinhood going after silver for?
Well, here's the thing. The one thing that silver has in common with GameStop is a short interest. There are big banks like JP Morgan, right? They're the boogeyman, right? Shorting silver, right? They have short positions.
But 1 second. They screw guys like you and me because we're counting for the price to go up and they're keeping the price down, the little bastards.
Well, but as far as I'm concerned, since I want to get more people to buy silver, they're doing us all a favor. They're letting us buy more silver cheap by selling it. But here's the thing that they focused on. And in fact, as soon as this GameStop thing exploded, on Wednesday, last week, the title of my podcast on, the Peter Schiff Show was "The Mother of All Short Squeezes Is Yet to Come." And what I was referring to was the short squeeze in silver and in gold. And then, the next day, that's what they're doing. Now, I don't know that they got it from me. Maybe they just saw the similarities on their own, or somebody did. But here's the big thing. Most of the silver that's traded is traded on futures exchanges. People aren't calling up Schiff Gold and buying their silver and we're mailing it out to them. They're just buying a contract on the COMEX. And a silver contract is 5,000 ounces of silver. That's a lot of silver, but you don't have to pay for all of it. The margin requirement, maybe you just put down 3% or 5%, whatever it is, and now you have a contract that entitles you to 5,000 ounces of silver. Now, somebody else sells that contract to you. So you have the right to buy 5,000 ounces of silver. Somebody else has the obligation to deliver you 5,000 ounces of silver. Except the person who is entering that short and has the obligation to deliver, they don't have the silver. They don't own any silver, and they're confident that they're never going to actually have to deliver it because the person who bought it doesn't want the silver either. He's just betting that the price goes up. Right. So this is the key. What happens if all these people who are buying silver futures contracts decide, or a big number of them decide, I actually want my silver? And they pay their full amount, right? They don't just pay the margin, they pay the balance that they owe. And now the guy that's short gets sent a letter from the COMEX, you owe us 5,000 ounces of silver, or maybe 50,000 ounces, or 500,000, depending on how many contracts are short. And then the guy's like, but I don't have any silver. Okay, well, go buy some. Now you have to go into the actual market. You got to call up Schiff Gold. Hey, you guys got any silver? Sorry, we're out of silver. That's like, now you go, well, we'll pay any price. Now we have to start calling our clients. Remember that silver we sold you at $30? I got a guy willing to pay $200. Will you sell him some? Because they have to find it. They have to deliver on the contract. So that ultimately, that's what could happen to silver, and it will happen. So it's inevitable, right? Just Murphy's Law. It's going to happen.